37.94. 37.94. 37.45. 38.23. So we've got this 37.45 price with an M beside it. Major level. Major level. 37.45. And then we look at what happened on the charts today at 37.45. And everybody's got 37.45 on the screens, right? Everybody's got this price area here on the screens. Everybody knows that this is a major level. We start watching the value at this major level. We start considering other elements at this major level. And all of a sudden we start recognizing they go for a Dufus transfer. What's a Dufus transfer, guys? It's where we bring the Dufs into the markets. How do we bring a Duf into the markets? We widen the markets, guys. So this is what we call the Dufus transfer. This is where we transfer all the bad stuff to the Dufuses. So this is where we transfer all the bad stuff to the Dufuses. Okay? And this is why we call it the Dufus transfer. And what are the Dufs? Who is the majority Duf, guys? Who's the majority Duf? The majority Duf is a guy called a breakout trader. With trend. And it's one of those guys. Now, I'm not saying that trend trading is Dufuses. What I'm saying is, with the value wrong, it's Dufuses, okay? Because we trend trade all the time in terms of the interns exercise, the BSG squeezes, the tipping point trades. We trend trade all the time. So what's the difference between a Dufus and a proper algo prop desk HFT type trader? Well, it's the location and it's the value, right? That's what's different about them. So when we talk about a Dufus transfer, what is a Dufus transfer when we're bullish? A Dufus transfer when we're bullish, for example, would look something like this. So the prices are in a balance area here. Now, why is this not a Dufus transfer? Because of this concept here, okay? These guys don't see a trend yet, right? They don't see any kind of trend. They're not able to identify any type of trend ideas at all, anywhere. So if we're bullish, we want to now pull and push the market, guys, okay? We want to pull and push the market. Does everybody see the Dufus transfer taking place there? You might be saying, but I thought you were bullish. How is that a Dufus transfer? If the value is bullish, how is that a Dufus transfer? Because the Dufus is not in the same trade as what you would be in if you were trading this as an intern. The Dufus is not in the same trade, because if you're trading this as an intern, you'd be in here for a BSG squeeze. Well, the Dufus is not in there because at that stage we don't have a higher high. You understand that? At that stage we don't have a higher high. So really what the Dufus will probably do is come in at this price here. Okay? So there's the Duf. There's the Duf right there. Now you might be saying, but is that not still a good trade? Well, it'd be a good trade if you got in early. It'd be a good trade if you maybe bought here as well. But what we'll try and do is, we're not always successful because there's too many good traders trading this area, but let's just do the Dufuses first. What we'll then do is we'll jam that guy in place here. And we'll still give them the hope that the market's still going to do what they're wanting it to do. Okay, so where's the stops for this guy, guys? Where's the stops for this guy? Well, because he's a Dufus, his stops will be where everybody else's or Dufus's stops are, and it's going to be one tick below the previous low swing, right? And that's where the Dufus stops are, right there. Guess where this price is going to go to? Guess where this price is going to go to? Exactly where that red arrow is. And what we do is we bring in other Dufuses. How do we bring in other Dufuses? You see it? Lower lows, lower highs, lower lows, lower highs. There's the big breakout. That's going to bring in a lot more Dufuses selling into it, as well as the stops from the first block of Dufuses, as well as the stops for the first block of Dufuses, so the selling here gets bigger and bigger and bigger and bigger. So obviously as an institutional trade, that's going to be where I'm going to be trying to buy into this as a storyline, right? That's where I'm going to be very, very keen to explore the long side of this trade here. And obviously we've set this trade up perfectly for a buy trade, and obviously the takeaway from that is usually relatively brutal. And everybody has to chase to get into that hasn't really seen it. Well, that's exactly what happened to the S&P at the bottom edge. Did you see it? It's exactly what happened to the S&P at the bottom edge here. Take a look. Do you see what happened? So we had a low here. We had a high here, so that's a widening kind of the channel at that stage, a widening of the channel. Then we had a higher low here. We had a higher high here, which brought in an awful lot of Dufus buyers, right? So that brings in a lot of Dufus buyers, which means that there are now a lot of Dufus sellers at the bottom edge of this price here, correct? That's where the Dufus seller is now located after the Dufus buy came in at the top edge. So their stops are located exactly there. And then what happened? Well, then what happened is quite straightforward. So we've got a higher high here. We've got a higher low here. We've got a lower high here. When the price starts breaking south here, we're now going to do what? We're now going to see what? We're going to see the Dufus sellers coming in through that phase there, right? So we're going to get a lot of Dufus sellers through that phase. And obviously when we're getting those Dufus sellers through that phase, what am I doing? Well, what I'm trying to do here is I'm trying to buy into that Dufus sell right there. Do you see how it's the exact same drawing? See how it's exactly the same drawing as what we had in the charts? So that's the Dufus transfer. That's a full Dufus transfer. Sometimes we only get half of that type of situation. We can't drive it back down again. We can only do a little bit of inside business or whatever, but that's the basics of the Dufus transfer in its entirety. It's very rare that people fall for this, but sometimes they do. And it was early enough for people to fall for this because it was at the London Open. I mean, this happens more at the Opens than it happens anywhere else, right? So this happens mostly at the opening phase of the morning session because everybody's trying to trade what? Why does it happen at the opening session, guys? Scott will be able to tell you the answer to that. Why does it happen at the open more than any other time? It happens at the open more than any other time because there's always going to be a volatility expansion. There's always going to be a volatility expansion. Everybody's trying to catch today's move, correct, Kuba? Everybody's trying to catch today's move because everybody knows that this is a good time to catch today's move. The price is not going to stay at the same price as the open, right? It's going to expand from the opening price. So every time you expand from the opening price, this is why, as a rule, I try and trade the rejection, the first rejection of the opening price, so that they've already caught the first Dufuses in place. The price drops from the open, the price rallies back through the open. So we've got the first Dufuses. The sellers who came in at the open are now trapped in a short position. Well, I'll take advantage of that. The price goes up and the price doubles back down. And the buyers that all bought above the previous highs or whatever, they're now trapped. So I'll then sell to those guys. And I'll just trade each time we get an opening rejection of something. I'll try and trade again. I'll try and trade against that or with that rejection, if you know what I mean. So if it's a rejection of a high, I'll try and sell it. If it's a rejection of a low, I'll try and buy it because that's the Dufus transfer. This is the whole concept of level 2 liquidity when you think about it, Paul, isn't it? The idea of getting some Dufuses into a high price at breakout traders and stops and all that kind of stuff. The idea of getting that liquidity is very, very simply at the core of pretty much the whole concept of level 2 liquidity trades. This is a Dufus transfer regardless of what happens into that area. So it happens at the open because there is always a desire to catch the first trend of the day. There's always a desire to catch the first trend of the day, and therefore people are more inclined to kind of commit to the breakout trades more than any other time of the day. They're more inclined to commit to the breakout trade during those periods. And eventually, obviously, it goes nicely for us here. We get this brilliant ride north. And then as we move into the ride north, you can see what happened. The delta divergence was crystal clear into this high retest. Crystal clear delta divergence. Do you see the easy money sell trade, guys? Well, the buy trade was 44. The sell trade was 88. 44 to 88, guys. 44 points. $2,200. What? Yep, $2,200. Now, we obviously had the divergence in terms of the delta. Delta's selling now, not just neutral, delta's selling. So we now see that delta divergence visible by the delta, not by the price, by the delta. Because obviously the delta hadn't improved anywhere through that, but there hadn't been any delta selling through that phase. And that's something that you should understand about delta, is that there is no delta selling at any stage through that phase against a relative value. So in other words, every up candle still had positive equal to delta. In other words, the buyers were still coming in. Remember, delta is delta at the end of the day. It's still buyers coming in. But when we had this rally, the delta was nowhere near where it was before. That tells me this is exhaustion. So that flat line, guys, is not delta divergence. Do you understand that? Does everybody understand that? This is what we talked about when we talked about value as well. That phase is not delta divergence. It's not delta bullish and it's not necessarily delta bearish either, but it's not delta divergence. This is delta divergence. Delta divergence, not price divergence. That's why it's called delta divergence, right? It's the delta that's diverging. This is delta divergence against this pullback here, correct? That's a sell trade, yes? That's delta divergence. Does everybody understand that? Same as value. I want to see the value driving. I don't want to see the price driving. The value is the one that should be driving. Understand that as well. Everybody knows that because we covered it in classroom a short while ago. Everybody good? 2 people recognize that. Good stuff. Good stuff, guys. Well, anyway, $2,200 on the way up and another $1,000 on the way back down. $3,000, guys, this morning for Melvin. How did you work out where your target price was, Melvin? I'm saying Melvin. I don't even know if Melvin got the trade. I'm assuming so. And the reason why is Melvin makes a bit of a play about the levels from the day before. That's why we always pick on Melvin on these, to make sure Melvin's got them, because he should have them. So when we understand that, how do we know that there was a possible sell coming in at 88? Well, there's a couple of things. Number one, we got delta divergence. That was the main thing, of course, but that's not the only thing, is it? Because if we look at it from the perspective of the bottom edge, and then we get this top edge here, for example. So if I look at where that top edge is, if I've got a bottom edge at, say, on average about 48s, and the top edge here about 68s, where's the high price? Bottom edge 48s, top edge 68s. Where's my average price, target price, guys? 48s, 68s, target price. Oh, I don't think it'll take that long to type in. Bottom edge 48s, top edge 68s, target price of 88s. Finally, we got there. Thank you, Matt. So a target price of 88s. So we've got a bottom price of 48s on average, or around this area. 48, and you can see 48's not a million miles away from the average buyer in here. And then we had a top edge here of about 68s, yes. So there's the top edge of 68s. So if I've got an average buy of 48s and I sell it at 68s, a half-back buy coming in here at 58s, yes, there's a half-back buyer at 58s, then my target price must be 88s on average. It's just an area, right? It's an area. It's not an exact science. So when we come into 88s and I see a delta divergence at 88s, is it not screaming short? It must be. Must be screaming short, surely to goodness. It must be screaming short. So when I understand that it's screaming short, I need to try and take advantage of that screaming short opportunity, right? Absolutely. Absolutely. So there we go. There's another opportunity to get involved in a perfect bit of business for another $1,000 profit. Unbelievable. It's not really unbelievable, is it? It's actually just the basics of trading that we do every single day of the week. Crazy good or just good? Crazy good and good, guys. Well, disappointing for us oil traders. We didn't manage to get the selling to drive any lower. Well, that's not unusual for this time of the day. The market, as a rule, does not change direction. As a rule, doesn't change direction from 11 o'clock onwards. If we've been driving higher from 8 o'clock in the morning, we all know as oil traders that at 11 o'clock we don't normally see directional shifts. We normally see profit-taking shifts. And that's what we've had since 11 o'clock. That true, guys, oil traders? So when I look at the timing of my trades this morning, I was a buyer of oil at the open, 8 o'clock, right on the Brent market open. I did a measured move, which took me to a half-back trade area here, and it took me to a full measure area up here. I had a measured move here, which I was interested in taking advantage of. It was a good breakout of that area that got us into the trade in the first place. So I started my selling here, but this selling is starting at 11 o'clock. Well, I'm not expecting this selling to be anything other than scalps. It's the wrong time of the day to drive a trend, guys. There's not the volume to drive a trend. The volume to drive a trend is between 8 o'clock and 10 o'clock each day. So between 8 o'clock and 10 o'clock, there's the trend, right? There's the trending move. So this is the profit-taking move, when I can scalp profits, but the trend is bullish. It's unlikely that that trend will reverse at 11 o'clock. Does everybody make sense of that from a fundamental point of view? Well, some might argue it's not fundamentals, it's technicals, but it's not really technicals either. It's a fundamental time that happens every single day, regardless of the technicals. So we can understand that this is never going to be, in most cases, a trend reversal at 11 o'clock each day. The next reversal is going to take place when? Probably at 2 o'clock. If there's going to be a reversal, it's probably going to take place at 2 o'clock in the afternoon. Why? NYMEX open. Nobody understands this. My God. Okay, so I don't really know how else to explain it then. Nobody gets it. Should be straightforward, guys, but a bloody why would be useful. Right, welcome in, guys. Let's just get through the numbers since I'm obviously speaking to myself. Let's get through the numbers this morning and let's see what we've got. Okay,